Okay, draw on liquidity. This is a concept that I've been super excited, really looking forward to teaching you guys draw on liquidity and daily bias, because this is honestly the most important thing. Like these two things right here, if you get these down, you really do not even need to worry about your entries. Like your entries are going to take care of themselves. Once you master this, you can literally operate with no entry model whatsoever, and you can still smack some crazy trades as long as you understand draw on liquidity and daily bias. So this is honestly the core foundation of being able to just know when your entry is going to play out and not play out. So let's go ahead and dive into draw on liquidity. Now, the first thing we have to understand is that price is always doing one of these four things. Price is always moving from liquidity to liquidity, liquidity to imbalance, imbalance to liquidity, or imbalance to imbalance. And we saw a couple examples of this in our previous price action lesson around order blocks and around fair value gaps. So we know by now that price likes to leave PD arrays, inefficiencies, imbalances. What are those? Fair value gaps, order blocks, liquidity, liquidity voids, all of these things. So we understand what imbalances are as of now. And we also understand what liquidity is. London high, London low, daily high, daily low, external highs, internal highs. We know what liquidity and imbalances are. So with that being said, if price is always moving from liquidity to liquidity, from liquidity to imbalance, imbalance to liquidity, or imbalance to imbalance, and we know what these things look like, we can tell when price, we can now tell when price is going to do pretty much anything. Or at least we have a very solid understanding of what it's most likely to do next. So by understanding this, we can anticipate where the next likely draw on liquidity is going to be, and then we line up our entry and our exit with that understanding. Now, moving on to what actually is draw on liquidity in terms of defining the next likely draw on liquidity? So this is basically where you're just anticipating where the next candle is likely to go relative to whatever time frame you're on. So with the bottom ticking and top ticking model, a lot of times we're trying to find where that 15-minute candle, that first 15-minute candle at 9:30 is going to draw to. So in a sense, where is the draw on liquidity that we could potentially run to? And you do not have to pick the candle's exact closing price or like if it's going to close fully in that direction. You only have to predict the initial expansion to that draw on liquidity. So in this example, we have a fair value gap down here. We had made a nice bullish run, order block down here as well. So we could probably move to retrace to that fair value gap. So if I'm on the daily chart looking at that going into the next day, my bias, my draw on liquidity might next be that fair value gap right there. So that's just a quick example. Of course, it is relative to whichever time frame you're looking at, and there's different types of biases based on what time frame you're trading in. So what is daily bias versus session bias? You may have heard this before, like never trade without a daily bias, don't fade the daily trend, don't fade the higher time frame trend. All of that's great, and I do agree because we'll get into why daily bias is so important and the role it plays. But all daily bias simply is just daily candle draw on liquidity. Where is the next daily candle likely to draw to next? You don't have to predict, like I said, where the candle will close by the end of the day, just the initial expansion. So in this example, price doesn't have to come down here and close in here, but as long as we catch it going down here, that's plenty enough for us to short and make some money. Maybe it touches there and starts to go up, so then we can take a long, but we already predicted the initial expansion of that candle, of that draw on liquidity. And if there's no daily bias, and even if there is, you also will find your session bias by dropping down to the 15, the 1 hour, etc., to go ahead and find your session bias. And what does that look like? It looks like the exact same process, guys, except you're just looking at a smaller time frame. So if there's no clear daily bias, you'll have to rely on those time frames. When session trading or scalping, we really only need to focus on the next 1 to 3 15-minute candles and where they're going to go. And like I said, when you line it up with the daily, it's even more high probability but it is not required. Now, why is daily bias important? Well, daily bias is important, and we're going to get on the charts after this, so do not worry, guys. We are going to get technical, but daily bias is important simply because it's the strongest directional pull of the day. So there was a time during my trading career, I was looking at my journal and I had the epiphany that my biggest wins and my smoothest days came from when I was perfectly aligned with that daily bias, with that initial daily candle expansion. And the days that I'd lose money or see my setup fail or fake me out came from the days where I wasn't aligned with the daily or higher time frame expansion, or when I simply didn't see a level that I was about to deliver from on these time frames. So I'm not saying you cannot trade without a daily bias. What I am saying is you will have higher probability when you have the backing of a daily or higher time frame bias. And if you notice price seems lower probability, or like your setups aren't playing out, you're probably going against the higher time frame trend. So now that we've covered all of that, let's go ahead and hop on the charts and start to see some examples of this. I'm going to go ahead and point out this one that we already outlined in the order block lesson, but this is just a great example of imbalance to imbalance. And why is that? Well, let's delete all of this extra stuff on the charts, and let's just simply hone in on the imbalance that we're focusing on. Well, this is an order block down here. What is an order block? It is an imbalance, and then there's an order block right here. So price went from an imbalance to another imbalance. Where does it go after that? It goes from this imbalance to where? Well, it goes to liquidity. We swept that low. There was a low down here. And then even if we want to take this low down here, that is an example of imbalance to liquidity. And even right here too, we had that order block right there. So we have imbalance to liquidity, guys. So those are two of the examples of the four ways that price was moving. Now let's look and see if we can find some other examples. So let's see here. In this example here, this is a consolidation, but price is moving from liquidity up here to liquidity down here. So you can see in that case, it'd be liquidity to liquidity. Now, I know this is messy, but even in messy markets, you can still see how this plays out perfectly. So that's liquidity to liquidity. Now let's do liquidity to an imbalance. So where is there liquidity to an imbalance? Well, if we go right here, we had a previous London low down here, but we also had a daily low at that same level. Came down to sweep it. So what would that be, my friends? That would be liquidity to imbalance. Because not only did we have liquidity for the entry, we had a bearish fair value gap that we were likely to draw into. Now, at this current moment, we didn't know whether that be a gap that sells off or continues, but all we're interested in is catching that move up into that gap. So that is liquidity to imbalance, liquidity to liquidity, imbalance to imbalance, and imbalance to liquidity. These are the only four ways price can move. So how do we apply this to our actual sessions, to actual price? Well, right here, guys, you remember this example from here. What do we have here? We had higher time frame target below. We had an order block as well as a fair value gap, two imbalances. We had bearish structure at a premium. See how all these concepts are lining up now? And then what happened? We went from an imbalance to another imbalance. And then ultimately went from imbalance to this liquidity down here. And then once we make it down there, then we go from liquidity to imbalance, all within our session. So you can see this is always happening all the time, guys. Here's another example right here. See, it went from that order block up here to that fair value gap. So that's imbalance to imbalance right there as well. And then you can see here it went from this liquidity, London low, to this imbalance, fair value gap. So start studying this. Start going through your charts, guys, because this is where the gold is. This is how you actually position yourself for the big moves of the day. It has everything to do with draw on liquidity. This is also how you know when your entry is going to play out and when it's not. When you do not have a draw on liquidity, that's often when you don't see entries actually play out, guys. And we're going to get much deeper into like entries, pairing it with this. We're going to get into like when it isn't a draw on liquidity versus when it is a recent draw on liquidity. We're going to get a lot more granular, but this is plenty enough of an understanding to get you guys in the market, making money, and building real confidence with some of these setups. Hopefully you enjoyed this lesson on draw on liquidity. This is one of the biggest breakthroughs in my trading. If I had just focused on this first instead of trying to learn all these little entry patterns, I would have been perfectly fine, guys. So make sure you master daily bias, draw on liquidity, and just bias and narrative overall, because this is going to be the foundation to finding your way in price. No matter where price goes, no matter what price does throughout the day, it's how you can always find your way back to an understanding about price and where it's going. Even if that understanding is, it's not fucking doing anything that I like, so I'm going to leave the charts. But this is how you determine that. This is how you validate your entries. This is how you know where price is going every single day. So comment below, day 18 complete. Let us know what you learned from this lesson, and I'm very excited to see you guys in the next one. Peace out, ladies and gentlemen. Have a great night.